make sure you mute your lines and please turn off your videos while the presenters are presenting. At this moment, if you would be willing in the chat icon to select all panelists and attendees and enter your name, organization, and location, that'd be helpful just to know who's in the room. And then when we get to the Q&A, go ahead and turn your cameras back on. It'll just really create more engagement, I think. And each of you should have received, if you were able to register ahead of time, you should have received something. Oh, you can't see it because it's white. How's that? A whiteboard paddle and a marker in the mail. So if you find something inspiring or exciting or new, go ahead and write a quick adjective on there. And then during the Q&A, when we all turn our cameras back on, you can kind of show it and share some of those. All right. We are still working to get one of our panelists connected to audio, but what I'll have Jill and Ian do is introduce themselves and just a quick description of the work they do and where they are. Jill, would you mind going first?
Sure. Can you hear me okay, Carissa?
Absolutely.
All right. Well, good afternoon, everyone. My name is Jill Jacobson, and thanks for taking time out of busy schedules and to spend an afternoon with us and attending the housing conference. It's lots of good information. I manage the real estate department at Glacier Bank. I'm based out of Kalispell and have been at the bank for about 18 years. I spent the first 10 years of my career as a commercial lender and then transitioned over into real estate, where I've been the manager for the last 2 years. I took over for Mike Smith. Some of you might know that name. He became our bank president, and I took over for him managing the department. So that's who I am.
Ian?
Yeah, Ian Ullman with Guaranteed Rates Mortgage Company out of Billings. I've been in the mortgage lending space for about 6.5 years, and prior to that, I did 10 years in kind of an operations and research team at Wells Fargo. So I accidentally found banking, and 16 years later, I'm still here.
Thank you. Ryan, any luck? I love technology. Well, Ryan Cobb is here, and he is one of our panelists, and we're hoping to get him connected to audio soon. He is the VP of Mortgage Lending at Valley Bank of Helena. So hopefully we'll get that connection made soon. But I would like to jump into the Q&A. And I have a couple of questions that I'm going to start our conversation with, and then we'll open it up to questions in the audience. As I said, if questions come up, go ahead and type them in the chat. And I will work to pull those out and ask the panelists as we, after we get done with these kind of initial questions. So first, Jill, if you want to start, do you want to talk to us a little bit about what you're seeing in your part of the state? What's the status of the market? What's happening with residential real estate in your market?
Sure. So we're obviously located in Northwest Montana, close to Glacier National Park, Flathead Lake. So what we've seen in the last year is a huge influx of folks moving here from out of state. Krista, do you want me to show that map and kind of talk a little bit about that?
We're going to talk about that when we talk about borrowers.
Okay, you got it. So yeah, we're seeing a huge influx in migration of folks moving to the state, buying second homes here in our area. Are much like many of you in your markets, we're seeing price increases rapidly escalate. I would say COVID changed the landscape in which our borrower profiles exist. And so throughout 2020, 21, and the first part of 22, we just saw a huge increase in prices across the board. Affordability is a topic of conversation that we are all part of in our everyday conversations as rental prices increase, our home prices increase. So we're really feeling that affordability factor in our area. We were dealing with bidding wars throughout much of 2021. We're seeing a little bit of that soften in the last few months as economic conditions are uncertain. We've seen more inventory come online. I just looked at a report this morning. At the start of 2021, we had 50 listings in our market area in the Flathead. That doesn't include the Butte Silver Bowl area where we have a branch, but in the Flathead, we had about 50 listings. Today, that's 500. So a huge, huge turn in inventory, which what does that mean? I'm not quite sure. We are seeing price reductions on listings as well. So it's kind of been an interesting ride between call it January 1st, 2021 and what happened there where nobody could get anything under contract, bidding wars, things going for $50,000, $75,000, $100,000 over asking, to now seeing more of a leveling out of prices. They're still a little high. Our average loan size at Glacier Bank, just in our portfolio lending, that doesn't include loans that we sell in the secondary, but our average loan year to date in 2022 is just over 600,000. So we're definitely seeing some pressure on prices and inventory, but we're also seeing some leveling off these last 2 months.
Thanks for sharing that. Definitely an interesting market up along Glacier. Ryan, do you have audio? Not yet. Still figuring it out. Okay, all right. Ian, why don't you talk a little bit about the market that you all are seeing?
Yeah, so Billings has been, I mean, substantially similar to the rest of the state in regard to the inventory issues, the bidding wars, all those kinds of things. I may have to move up to the Flathead. Currently, as far as single families, condos, and townhomes, we have 189 active listings sitting today that are not under contract. That number went over 200 for the first time, I think a couple weeks ago, and it was the first time in probably a year or two. So inventory is coming back up. I think that'll chill out some of our pricing stuff. Also with interest rates obviously being up a little bit, that's slowing some of that aggression down, but the demand is still there. I've still got, 10 pre-qualifications for every one deal that I've got going.
You're still seeing that level. Okay. We'll jump back to Ryan. He's calling for technical support right now. So we're going to get him connected, but I am going to keep moving forward with Jill and Ian. We'd like to hear a little bit about the borrowers themselves. Talked a little bit about the market that you're managing, but what about your borrowers? Who are they? We are hearing a lot about these, out-of-state buyers, cash buyers. Are you seeing that, Jill? You kind of talked about that a little. Ian, why don't we start with you?
Yeah, it's definitely been something we've seen. I should have gone back and looked at my pipeline to check my exact numbers, but if I was shooting from the hip, 50 to 70% probably out of state on my pre-quals. Cash buyers, I don't see typically unless realtors are telling me about them. It's not a thing, but I know it's happening because a lot of times clients are getting beat out because there's cash offers on properties. But I've got some that are, as we call it, kind of churning within, as far as current homeowners looking to upgrade, looking to relocate slightly or more so. But a lot of first-time home buyers just trying to crack that egg. And then an interesting thing that we talk a lot about the dominoes is a lot of the older homeowners who are looking to downsize, simplify, those kinds of things, or go to single levels, townhomes, patio homes. Because of the price point issues, there's some hesitancy to do that. And so then there's this cascade where that means that their current home doesn't open up for a more middle-aged buyer to move up into, which then restricts a first-time home buyer from going into that house. So it's not just one transaction that's backed up, it's 5 to 7 dominoes that roll for every house that actually moves.
Absolutely. And are you seeing first-time home buyers have those successes sometimes, or are they often the ones that are getting beat out?
They're getting beat out on some. I've got a first timer right now under contract, actually closing, I think, next week. Fingers crossed, due to some stuff on the seller side, as usual in our business. Even if we have everything go right, something goes wrong on the other side. But yeah, I mean, they're getting some wins, and more when we're going to talk about home buyer opportunities, I'll chat more on that. But there's some wins happening. You just have to be positioned right.
Great. Jill, what about you? You want to talk to us about your borrows and then share that graph that you have?
Sure. So very much similar to Ian, we're seeing a lot of in-migration. I do track that data. I'll share that map here in just a second. But in 2020, about 1 in every 4 of our borrowers was from out of state. In 2021, that statistic held tight. It was a 1 in 4. I think year to date, we're about 1 in 5. So a lot of folks trying to flee urban areas. Again, COVID at the onset of 2020 allowed so many individuals to work from home. So those folks from Florida who would come visit the area and fall in love with it, but couldn't move here because their jobs tied them to Florida, now can. And so that's that in-migration we're seeing. First-time home buyers is a struggle for us. We do track for CRA purposes our innovative and flexible lending programs, which includes FHA and VA, rural development. We were finding that, if FHA was the source of financing in a contract, that sellers would just kind of pass by that one because they had conventional offers behind them and cash. And so we have a lot of referral partners in the area, and they are seeing still so many folks coming in with cash. I'll show that map. This is just for fun. Now, bear with me. I'm not the most tech savvy person here. So, Krista, let me know if you can see that.
Yes, perfect.
Okay, perfect. So on the screen, what you're looking at is our statistical data for out-of-state buyers. This is just fun. Folks get a kick out of it because we all live in Montana. Some of us were born and raised, some of us are newly here. But you can see where the states, where people are coming from. So these represent refinances are included in there. Obviously purchases, construction loans that we do, any lot and land financing that we do. So clearly our friends to the southwest of us in California are running top of the line there: Texas, Nevada, Arizona, Washington. And then just statistically, I'll explain. So by purpose of all the loans we did to out of state, 17% were refis, 64 purchase. That's a huge statistic. And then call it 20% of construction. And then by occupancy, which is even more interesting, 25% of those loans were for primary residence purchases. So people moving here to live and raise their families here. Second home, of course, is huge. And then that investment property statistic's a little bit misleading. The way we code our lot and land, so vacant land, is an investment property in our system. So those aren't true duplex cash. I'm buying this for a cash flow purpose. It's most of that is lot and land. So about one in every 4 in 2021. And then I'll just scroll down, and you can see this was through first quarter 2022. Refi, purchase, and construction, and then the same statistics. But clearly, California and Texas are high up there. We are seeing more coming from the Midwest. Before the call, Ian and I were talking that we're seeing a lot of Minnesota lately, and I'll update this map as we get through the end of the second quarter to keep tracking that. The interesting part of this data, if you think about it, though, is that's just Glacier Bank's data. That's the folks that came to us for a loan, not Ian's folks, not Ryan's people, not any mortgage company. So if that's our data, multiply that by 10, 15 other institutions in your area, and they're seeing the same thing. So you can see that there's a huge influx there. So again, first-time homebuyers, we still are doing some Habitat for Humanity loans where we take advantage of any down payment, and we're getting folks in there through those vehicles to get folks into homes. But gosh, most of our borrowers are conventional loans that have sufficient down payment. They're selling their houses in California or wherever and walking away with a lot of money, and they're able to put that down and beat people out that maybe don't have as much down. It's been a stressful environment for folks that are trying to get into stable and good homes. The other side of that too, and we might talk about that, is the affordable houses on the market. People are getting really, really creative to try and get into something. We're seeing a huge uptick in manufactured home requests, which have their own set of issues you have to work through from a lending perspective, as well as people, parents might have a vacant land where they own a house and their kids can't get anything, so they're going to build a house for their kids on their land. And so a lot of creativity there.
I bet. Well, and it's just like you said, there's so many people that are here that want to live here, let alone the influx from out of state. Absolutely. Ryan, let's try it out. Are you there?
All right, can you hear me now?
Woohoo! Got it. That's
All right.
fantastic. So
Excellent.
how about we
Finally.
jump back and you can do both questions. You want to talk a little bit about the market that you have there in Helena, and then who your borrowers are? Who are your borrowers?
Yeah, absolutely. Yeah, thanks. Sorry, I had a little bit of technical difficulty there. Can you guys see me too? I can see myself on my screen, but okay, perfect. Yeah, so our market, kind of like what Ian and Jill both said, I just checked the Zillow listings yesterday to find out what the market's doing. Just in the Helena area, there was only 125 active listings. I expanded to the greater area to kind of include, Clancy, Jefferson City, Townsend, just a little bit broader range there. And we had about 213 listings. Of those listings, I wanted to find kind of the range of what's being offered. And, there was only 13 listings in the greater Helena area that were under 300,000. And there was only 8 between 300 and 400,000. So, it just kept getting broader, as you incrementally went up 4 to 500,000, there was 21 listings and so on. So, for that lower range where people are getting qualified, kind of like what Ian said, we have a lot of first-time home buyers out there that are, getting pre-qualified. We're getting them set up, and then, they go out, they look at the market, and those 8 listings that they have to offer are very competitive. So they're, having to make multiple offers to try and get into places. So we're still seeing some pretty competitive market out there, especially for first-time home buyers. Some of the higher end stuff, we're starting to see, price drops on a few things, and it's kind of starting to act a little bit more like a regular market where things are sitting a little longer. But the prices are a lot higher than they have been in the past. So that's different. And as far as our buyers, I've got a few that have been beat out by cash still. A lot of the borrowers that we have are either local, that they have built a house and now they're selling, or they've moved to the area. Kind of resound what Jill had mentioned too. We've had people from all over the country, a lot from California, Oregon, Texas, Washington. I've had some from the East Coast, and I've seen that as a mixed bag. Some are moving here because they've always wanted to move here. Some have been here on vacation and they've just thought, Montana's a great place. I'd love to live there. And they've had it on their bucket list for a long time. And then when the recession hit, they had the ability to work remotely. And so then they, made that move, which has, we've seen an uptick in that. I've also had a lot of borrowers that grew up in Montana and they've always wanted to move back. And so we're seeing a lot of people coming home, I guess, for that as well. They've always wanted to be back closer to family, and now they're getting the opportunity. In fact, my older brother and his wife just moved back 2 years ago. They've been out of the state for 15 years and decided it was time to come home. So we're seeing some of that as well. But yeah, our market is up, just comparing to last year. Our average sales price last year was around 375,000. We're still a little lower than Bozeman and Missoula. We're up to 457 for an average sales price, and that's about a 22% increase over last year. So yeah, so it's active. People are still building. Usually we have a lot more builds right now, but the home starts are a little slower because the cost of materials are kind of up and down depending on where people are at. And we've got a lot of builders that are out, it's going to take them, they're booked for a year. So before they can start a home. So we've got a lot of people waiting on new homes as well.
Thank you. Absolutely. I heard someone talking about the influx, and we Montanans love to say, oh, these Californians come into Montana, and you see the data, and it is a large number, but also understanding that California and Texas are also the most populated states, and so kind of statistically have more people to give to us. So really appreciate the conversation about the markets that you're seeing and the borrowers. I'd like to move on to talking about the housing types. So one of the hot topics of discussion in the affordable housing industry is diversifying home types. So creating homeownership opportunities rather than single family site build homes. We're seeing condos, accessory dwelling units, and manufactured homes. We've heard of those as sort of creative responses to the lack of homes. Are you seeing any of that? Have you heard of any of that? Ryan, do you mind kicking us off?
Yeah, absolutely. We are seeing creative solutions to that. Jill kind of alluded to that as well, with family members that are, deeding over acreage or doing family transfers and splits to try and lower that cost and make it more affordable. Some people can afford to build the house, but when you add a $200,000 lot on top of it, that's a big expense. So we are seeing some more creative things like that. There are some condos being built here. We've got one builder that's just finishing a few condos in a new subdivision. And they all started out that way. We've had a few subdivisions that have come online here in Helena. There was a 350 home subdivision, I believe, just north of the new East Helena High School. And their goal was to keep smaller lots and have a mixture of more affordable housing and then, some higher end homes with bigger lots. And kind of same old story, right? Supply and demand is they started out as affordable, and then those lots quickly went from 75,000 to 100,000, and the lower end lots were supposed to start out between 50 and 60,000, and then they jumped up to 80 to 100,000. So it eats into that affordability. We have had a lot of requests for shop houses or shop homes, or barn dominiums are a big trend. Barn dominium style homes, I always tell owners, it depends on the design and style and what's in the market, and depending on the foundations and how they're set up, sometimes we can finance them, sometimes we can't. A lot of requests for off the grid properties, which I feel like Montana has a huge opportunity there, but unfortunately the secondary markets haven't caught up to a pool of funds that we could use to finance off grid properties, which I think there's a gap there. I think if we could find, a pool of funds, either secondary market or private financing that would finance off-grid properties, I think we'd have a pretty big demand there. But yeah, we haven't gotten there yet.
All right, Ian, what about you? Different home types that you're seeing?
Yeah, definitely similar situations. With the pricing moves, it feels like clients who were, especially first-time home buyers, who were looking at an entry-level single family are now looking at alternate options, townhomes, condos, those kinds of things. We're seeing more condo townhouse type situations in Billings for the most part. There's definitely always kind of this discussion around manufactured modulars and shop houses, or shouses as I've come to call them. And same as exactly as Ryan talked about, the issue typically is what's currently standard in the market, because the hurdle for financing purposes oftentimes is finding comparable sales in the last few months, because everybody wants one, but it's kind of a chicken and an egg problem, where because they haven't been readily available on the market consistently, you can't get comps for them, and you can't get them onto the market because you can't get comps for them. So we see that a lot. Ryan, I have another friend and I who have mumbled about just starting a Schaus financing company, and that's all we're going to do because of the demand. So I'll let you know if we can get in on that. I'll throw your name in the hat. But yeah, I think there's, I know when I'm a former bank employee as well. I'm not just a mortgage guy. And so when I was at a previous bank, I know they were looking at what they were calling yurt financing, but yeah, tiny houses, non-affixed structures for residences, those kinds of things. So yeah, I mean, especially local lenders, everybody's trying to figure out just what are our options, what creative ways can we find to put people into homes.
Absolutely. Yeah, we here in Missoula, when Homeward placed some of our small homes near the Missoula Food Bank and Community Center, our banking partners had to get creative, and they were there with us trying to help us even to dip a toe into solving that problem. But it was complicated because of all the reasons you just highlighted. Jill, what about you?
Gosh, Carissa, same. I could just be a record between Ian and Ryan on repeat. We're getting the exact same requests. Those properties that come on the market with a 2 in front of the purchase price, I'll always go look to see what they are, and a lot of them are pretty run down, very difficult to finance because they not need a lot of TLC, and that's what people can afford, and they go in wanting to fix it up. And so we're seeing a lot of requests where we just can't wrap our hands around what that collateral really is because it's in such disrepair. There's a company that builds shed homes, so it's almost like a shed, but they then kind of go in behind the shed exterior and make it look like a home, and they'll deliver it. So very similar to a tiny home, barn dominiums and Schaus's 100%. We've been able to lend on some of those. We utilize our balance sheet in our portfolio, but when we do that, we mitigate that risk. And so we require a significant down payment and a shorter term. We're not going to finance those out 30 years. So from a qualifying perspective, yeah, they might be a little bit more affordable, but a lot of those folks don't have the 35 or 40 we want down. So they can't get into those places either. I've heard grumblings, in our area and across the state and potentially across the nation of people buying tracts of land and putting manufactured homes on there for people either to buy or even rent, because the rental market's tough as well. So the creativity out there is the floodgates of creativity are wide open. I think, Ryan, you said the family transfers. I mentioned that we're seeing a lot of that where parents are using their assets to pass along down to their children to help them. We are seeing a lot of parents utilizing equity lines on their own homes to help to give as gifts to their kids so that they can come up with those down payments in these high price markets. So yeah, creativity is huge.
Yeah, absolutely. We talk a lot about the challenges of this market, and I think you three have really been highlighting, while folks are being creative, it's still challenging. And I feel like in the world that we are working in and living in, it's easy to get bogged down in the negative aspects of, high rent costs, high home purchase costs, and low vacancy and availability. So I'd like to end my questioning with maybe a more positive tone, and then we'll open it up to group questions. And I want to talk about homebuyer opportunities. So what are the opportunities for home buyers in this market? And y'all have kind of touched on this, but we'll kind of hone in on it. What approaches do you see your home buyers taking? What tools are they using? What are they doing to feel successful and be successful in this market? Jill, do you mind kicking us off?
Oh, Carissa, it's a tough one. But no, I agree with you. I think we have to stay positive in this environment. It's so easy to look at what is going on. All of you were at lunch maybe an hour ago, but the Fed's just released, they're raising the rates by 75 basis points. And so what does that do to interest rates, and buying power is reduced? But I think, for us at Glacier, we really, yes, we have a lot of high-end borrowers who are coming in with a lot of cash, and it makes lending, quote, easier, if you will. But we really do focus on utilizing the programs that are available to us to get into housing, down payment assistant programs, utilizing MBOH and their different programs, and the Habitat for Humanity. I talked about that. That's a very niche product, but we've gotten in the last 6 months, 2 families into homes utilizing some of those. I think education is key. We will have young families come in and they don't know how to start down this path. And so really teaching our lenders to help educate those folks how you can get into a home. We really pull all of our arrows out of our quiver to use all the tools available to us to get people in. And we do it successfully. That's not been the norm the last 2 years, but we still have people utilizing FHA, rural development, more so in Southwest Montana where the prices are a little bit lower. But I think just knowing all of the resources available to our borrowers and to the folks that are needing to get into homes is huge. And that's how we're approaching it.
Fantastic. What about you, Ryan? What are you seeing opportunities for your home buyers?
Yeah, Jill covered a lot of those, but we've got some in-house financing that we've been able to use from time to time. But like Jill mentioned, if they're the right deals, and we've got to mitigate those risks, and make sure that it works for everybody involved. But trying to tap into NeighborWorks, their down payment assistance, the Federal Home Loan Bank, just any other down payment assistance, things that are available out there. I also think it's pretty exciting time too, because I think there's a lot of folks out there that, are wanting to make a move. They're looking to downsize and there just isn't the housing there. So, the positive side of things is that, there's a good demand for builders to continue building houses and to continue providing houses. And I think there's a lot of people out there that would make a move or are waiting to make a move until there is housing available for them. And they are sitting on a lot of equity. If people do have family members or parents that are able to tap into some of that equity to help them out, and we're starting to see some multi-generational housing too. People are getting creative and, they're moving parents in with them, or their kids are coming home, and I think it's also, bringing some families closer together and maybe more togetherness than they want. But there are some exciting opportunities out there. I think the borrowers also working with their realtors. They're getting creative, writing letters to families that are in the area. And sometimes, I've had a few contracts where sellers have gotten high-priced cash offers, and they've chosen to sell to a local Montana family because they prefer to have somebody that's going to live in the house and they're going to be in the house and raise their family there, rather than sell it and have it, be a rental or sell it to a high price out-of-state offer. So getting creative, showing that, knocking on doors, writing letters. I've had a few that they've been able to pick up houses and listings. They're at, family barbecues, and they're talking, and so-and-so has a relative that's looking to move or downsize, and it didn't even hit the market, but they were able to get a listing there too. So, just thinking of alternative conventional ways of making that happen. They are still able to get in there, and I think there's also you have to look past the surface. If you can find financing for some of those homes that are maybe needing an upgrade, putting some sweat equity and some elbow grease into homes, there are some of those out there as well. So I think coming in the future, we're going to have a lot of demand, and as long as the builders can keep building and we can keep providing that housing, I think we'll get more and more on the market.
Fantastic, Ryan. Thank you. I have to tell a quick story because one of our employees, 4 months ago, got the dreaded "we're going to sell the house, so you can't rent from us anymore" message. And they were able to approach their landlords and were given the opportunity to purchase well under market rate for that exact reason. The landlords had lived in the home for a really long time. They were able to purchase it when it was very low price, and they didn't feel like they needed to. They wanted somebody to have the same opportunity they did. So we had a success story right here in our office. Ian, what about you?
Yeah, I think all of those things that Ryan and Jill talked about, absolutely. To me, the big difference maker that I've been seeing in the market, somewhat to what Ryan talked about with, those so-and-so's friend or mom or somebody mentions it, and all of a sudden we have a transaction starting at a barbecue versus on realtor.com. So that's a big piece of what I think right now is reputation and relationships. And what I mean by reputation is we're still definitely in a multiple offer situation vast majority of the time. And I know certain agents absolutely will not take a pre-qual letter from certain lenders and will absolutely upsell other lenders as much as they can. So from the lending side, as much as we can pound the pavement and build those relationships and build our reputations the right way, that helps our clients. The other thing that I've started to see a lot more of, we have one lender at GR who's she's a major market producer. She produces over 100 million a year in residential. She sends every single pre-qualification for a full credit underwrite pre-approval right now. No questions asked. So there is no more just, I pulled your credit and you told me your income, so we're good now. We're seeing full underwrite pre-approvals happening more and more and more, which is a huge asset for the clients in those multiple offer situations. So I think just getting creative, taking those kinds of attacks, definitely knowing your down payment products and having those partnerships in place. Charlie and Vicky, thank you so much for putting up with our legal team, trying to get partnered up with Montana Housing. I've been climbing that ladder for a year now, but we're working on it. And it sounds like we're making progress. So it's just finding the right partnerships that work and that realtors know work. And that way they can promote, the client and the loan product and all of that. They can promote that as part of the transaction to say, Ryan and Jill and Ian, they know what they're doing, and they're working with great people like Lori over at NeighborWorks who will go above and beyond. And I may or may not have Lori's cell phone to text her dinner just to say thanks for being awesome, and that's where those relationships come in. Is at the end of the day, as much as it's numbers, this is a people business.
Absolutely. Thank you. That's a nice note to end on for our part. So folks, I'd love it if you would be willing to turn your cameras on. If you have your whiteboard and you have any thoughts or comments here, and then we will open it up to questions from the audience. If you have questions, we did have one that I'll ask that was in the Whova app while you all get your cameras on. And that was kind of a more specific question of when is a good time to consider refinancing your mortgage, especially in this climate? Anybody have an opinion on that?
I can take this one. Well, clearly we're in a rising interest rate environment. And so I think, depending on the situation and what the ultimate goals are of doing a refinance, I would say right now, probably not the best time. Again, depending on what the specific goal of our customers are and how we would advise them to either move forward with a refinance or not. We enjoyed 3 years of sub 4 30-year fixed money, and that is no longer the case. So I think when you talk about refinancing, I think what I advise my folks that my borrowers is, let's look at your goals. Let's look at your full financial picture. What would be the intent of the refinance? What are you trying to accomplish? And does it make sense from a financial perspective to take on now that 30-year fixed rate is over 6 as of this morning. So a 200 basis point hike in about 2 months, which has been painful for some. So I think what are the goals? I rather than just say yes or no, you'd have to look at it from a full global financial perspective to see if it makes sense.
Great, thank you, Joe. All right, folks, you're welcome to unmute or type questions in the chat. Julie's asking, are you seeing or hearing about opportunities for banks to leverage CRA for more local housing efforts?
I'll jump in here. Ryan, you might want to take that from a Valley Bank perspective. I don't know if I'm going to answer this question appropriately, but the housing across, especially in the Flathead, in our market area and in our footprint, is a constant topic of conversation. And what we're seeing in our area is how can we collaborate and come together as communities to provide more housing opportunities, whether a bank is involved or if we, it's for employees, we all, in all of our communities, we're having struggles getting people to come to work at our places of business, at local restaurants. And so how can we as communities band together from a bank and other places to provide employee housing and thinking way far outside of the box? I can tell you at Glacier Bank, one of our commercial lenders is highly involved in LIHTC. It's the Low Income Housing Tax Credit Program, and we do those projects all over the state. And those are all CRA, what's the word I'm looking for? Those go towards our CRA goals. And so from that perspective, we've really become kind of a niche lender in that where we are providing additional housing across the state, not just in the Flathead, but we have Great Falls and Butte and all over the place. So we are trying to really come together and work together to try and solve this problem. And it is a big one. I mean, there's positive things on the horizon. I think some of our local production builders they're still continuing to build. Now they're not putting stuff under contract right away, but as we see some price leveling and they keep building, there'll be more opportunity for people to get into homes at potentially lower prices.
Ryan or Ian, anything to add to that?
Yeah, I'll just jump in real quick. I know one of our commercial department lenders just recently worked on a low-income housing project here in Helena. It was called the Red Alder, and I know they had a equity partner in that, but it was a multi-million-dollar project we were lucky enough to partner with. And I apologize, I don't have the stats on that, but they were able to complete that project over the last year. I believe they started in 2020 and finished in 2021, and it provided low-income housing, and I'm not sure on the number of units, but it is over by the baseball field in Capitol High School, which previously was a large unused area of Helena, which actually the design and everything, it looks a lot better than just a patch of weeds. So it I think helped improve the aesthetics of the area. It also provided housing for folks, and it is Section 8. So they're getting federal funding for some of the subsidized housing there. And, I know that was just one of the projects that they recently completed. So there are some projects going on, and, I just think that demand right now is kind of outpacing what we can do, but we are working on that effort to provide more housing.
Ian, anything to add?
Being a non-bank guy now, I'll just nod in agreement.
Fair. What other questions do we have out there, folks? Anything you all are interested in hearing about our mortgage?
Yeah, are you guys, do you have any familiarity with lending for co-op housing?
That one I really don't. That's not something we've dipped our toes into yet. That's a really great question. It's not, we kind of end at the condo financing. We'll finance condos all day long, but co-op we haven't really got into. I do know that there's some avenues out on the secondary market that you can utilize to get those loans sold. In our markets, for our Glacier footprint, we don't have any co-op housing that I'm aware of, so it's not something that we've seen.
And I'm pretty similar with us having both correspondent and brokerage lending at guaranteed rate. We have outlets for co-ops. I've just never had an ask for one in the Billings market.
Mm-hmm.
Yeah, there was a presentation. Oh, sorry.
I was going to say, yeah, same here. Primarily, we do, primary residence projects. I've done a couple financing on purchases of like fourplexes. But when it gets into multi-housing like that and co-ops, usually our commercial lenders handle that. So I haven't had the experience with that.
So I have a question for people that are putting their houses on the market as quickly as bidding wars start happening and stuff. How are these people getting into their next home? Are they by any chance going to the bank and finding out what their borrowing power is against what they already have, knowing that they can utilize maybe that funding first to try to find where they're going to land and then putting their place up on the market with the hope that it sells quick, or what? Is there any sort of mechanisms for doing that? Does that make sense?
Yeah, go ahead, Ian.
I was gonna say, yeah, we see both avenues. I know a lot of realtors here in the Billings market especially will push their clients to talk to their lender about a bridge loan, as we call it. And what most people don't realize is it's a great theory. The problem is you're paying for two full houses worth of debt during the interim. So typically what I've been seeing because of the demand in the market is we're pre-qualifying people with the assumption of their home selling, even if it's not listed yet. And then as soon as they get their offer accepted to buy something, they're ready and on deck to list their home because they know it'll go under contract quickly, most likely. And then we just do simultaneous closings for the buy and the sell on the same day.
We've seen people leverage equity in their houses to create that down payment. And so long as they qualify, to Ian's point, with all housing expense, their current primary, the new one, we'll close that if need be, if it's a short close, if they qualify, and then they'll retire that debt, and that line of credit that they took out for the down. So they are leveraging assets so that they're more competitive in their offer. We're also seeing mostly related to our out-of-state folks where they will sell their house in California, net $2 million, buy in cash, and the day they close on that house in cash, we have a refinance application going for them. Under delayed financing, you can still consider that a no cash out, so there's no rate adjustment there. So they'll come back in just so that they can get the property acquired, and then they'll come back in and replenish their cash that way too. So we see that often.
Yeah, another thing I've seen is doing the same thing, coming in, talking to the bank, getting pre-qualified, but also, the buyers a lot of times will have contingencies, and I've actually seen seller contingencies on some of the buy sells where they list it contingent upon them being able to find a house to buy, which I've actually seen work pretty well for some sellers because they've been able to list it, entertain offers, get a contract, and then go out and find something that they know they can afford based on how much they're going to be able to net from the sale of their house. So I've also had it where they couldn't find anything, and because they had that contingency in there, the seller was actually able to back out of the buy sell and give the earnest money back to the buyer because they couldn't find anything. So yeah, I would say talk to the bank first, make sure you know what you can qualify for, but entertain doing a sale contingent upon being able to find another place as well.
Thanks, Michelle. What other questions do we have out there? All right. We can end early if everyone is done asking questions. Did I hear an unmute? Okay. Well, thank you. Thank you, Ian, Jill, and Ryan. Appreciate your time and sharing your experiences with us on this panel. Thank you to the audience members. Thanks for joining us. Remember, you can always participate in the community sessions through the Hoova app if you want to chat more. We are going to be on a half hour. Well, you all get 37 minutes. We're going to be on a break and we return at 2:30 for our closing plenary session with Dr. Megan Sandel. Thanks, everyone. Have a fantastic afternoon.
Thanks.
Thank you.
Thank you.